Exclusive analysis. In today's video, we're discussing a few of the different mega caps, the S&P 500, and overall what's transpired in the market. So today was an impressive day for the bulls. What looked like it was an overbought market is barely overbought in my opinion. We're just starting to get started. A great daily close on the S&P 500 daily chart here. You can clearly see that we're breaching this little resistance pivot zone here. So that's a beautiful thing to see if you're bullish the market. A nice ascending triangle pattern that is trying to break out. On the hourly chart, we actually did have a technical confirmed breakout. And how do we figure that? Well, if you use this little pivot high here, you can clearly see that's your first hourly breakout. It was confirmed. Then you got a sell-off, which got bought up again, and another little bit of a sell-off. So the overall on the hourly chart, the markets have triggered an inverse head and shoulders. This is yet again the next stage higher in this bullish market. And I believe it's the next stage higher to really push us pretty much to all-time highs. Now, the question is, are the markets going to do a liquidity sweep of this high pivot and stop a lot of the shorts out and sell off? The next level of support in the market is realistically this downsloping neckline. This is the true neckline of your inverse head and shoulders on the SPY hourly chart. So there is a scenario where you could absolutely retrace to that area and then do a continuation move higher. If you were to get a retrace, that would be an opportunity and a half to buy and I think accumulate more long calls on this market or some of your favorite stocks that really you haven't had a chance to get sort of an entry into. I am positioned long this market. Our members have already taken some profits. We've taken some profits on NVDA, 144 calls where we bought pretty much at this gap. They've catapulted higher. Today we took some profits on Tesla near the highs of the session, and that chart is looking a little bit more vulnerable compared to the overall market. Tesla actually closed slightly positive on the session, but realistically gave up the majority of its gains. So it's not a name that I'm looking to trade on the long side. I would need a little bit more of a lower price in my opinion, although it is a beautiful scalping stock. But if we look at some other names, the likes of Meta has had a technical breakout on the daily chart. A nice inside consolidation day, really holding above this previous pivot high. That's a healthy thing for Meta to see. After that epic move yesterday, you're getting an inside consolidation day. After a few more of these days, Meta could be a potential long all the way into the 714 gap and then potentially even higher than that. So I still remain bullish on this market. Same thing with the QQQ chart. QQQ did a little bit of a peekaboo attempt at breaking out today, but I think that there's going to be a little bit more relative strength in the S&P 500 stocks. You're probably going to get a little bit more broad participation from the overall market. Today, the IWM also saw some solid gains to the upside, but it really hasn't breached that previous pivot, 210 pivot high like you've seen on the S&P 500. So notice the S&P 500 has taken out that May 19th candle. The IWM really hasn't taken out that May 19th candle just yet. So it's lagging slightly, although it is shaping up for a very potential bullish pattern with an inverse head and shoulders here attempting to break out on the daily chart. All right, a couple other things to note here. Oil is also attempting a little bit of a breakout, inverse head and shoulders. Today we did see gold take a little bit of a breather. This chart is still looking A-okay. Also retesting the breakout trend line here, but it hasn't confirmed the breakout on the daily chart. So if gold ends up having a failed breakout here on the daily, then I do think we're heading to about $3,015 on gold. So it'd shave a few $100s off of that gold price. So this is a critical area that we need to be mindful of for gold, because if, again, this is a failed breakout, we're probably heading right down to this 3,000, 3,015 zone, your previous little long-term parallel channel where gold ended up busting through and breaking out. So gold is a little bit, just be cautious with gold. Natural gas, let's take a peek at that. Natural gas also attempting a breakout of this wedge pattern, but yet we need more time. It has not broken out. Technically, you're at resistance. If you get above this downsloping trend line, then you're looking at this 384, 385 pivot. If you get a daily close above that, then it's all out for the longs. You know, a daily close above this 384, 385 pivot flips my thesis, and I would likely go long. I would prefer a weekly close above that area, but a daily long, I would start getting curious about watching a bullish pattern develop. to trade natural gas on the long side. At this point in time, I have no position. I lean bearish, but I will flip my technical picture if we recapture some critical levels. A couple key stocks that I'm super bullish on: XYZ, Block. Just take a look at Block here. We are long already in profit on this particular ticker, but XYZ is shaping up for a massive continuation move higher. Bull flag breakout, bull flag breakout. That's a strong looking chart, let alone the inverse head and shoulders that likely wants to move higher. AI is another one that saw a little bit of a buy the dip program. I think this name is probably going to try to float back to the highs. It's now digested that massive earnings pop. You've roped in a lot of the people that bought up here, and I think that this is a name that likely is going to float back up to the high side. Let's quickly take a look at the US 10-year yield, because yields are certainly important. US 10-year yield, I think, is forming a bit of a bear flag here. Right on this wedge pattern, I think yields are likely going to break down. One thing that you got to be cautious with in this market is the Dixie is trying to form a little bit of a higher low here. So I still have it priced in that the Dixie on the weekly chart is probably going to head to about 96, pierce of $97. That is your overall much longer term trend. If we zoom out on the dollar chart here, you can clearly see that the Dixie, I think, needs to satisfy this upsloping weekly trend line. This is a massive multi-year trend line going all the way back to 2011. So once the Dixie completes that, then I think we should have a pretty strong move to the upside. This is one of the reasons why I think the equity markets are probably going to have a sustained rally to the upside. It's because the Dixie has a little bit more room to the downside. So let's just quickly digest the SPX here, just because I know there are some S&P 500 traders. This is the resistance I'm looking at on the SPX. There's this clear upsloping trend line, and you can use a parallel trend tool to realistically draw the next level of resistance. I think the S&P 500 is going to clear that 6,000 level and run into resistance somewhere along this upsloping trend line. It's hard to give you an exact target right now, but if we say run up into there tomorrow or the next day, you're looking at a target somewhere between 6,020 and 6,040 bucks on SPX. All right, so up until we hit that resistance, I still think that buy the dip programs are likely going to come into this market in full force. On that note, I hope this analysis helps. Definitely be cautious with shorting specific names. Today we saw a lot of outperformance in individual names. It wasn't really that even big of a rally in the S&P 500, but intraday price action looked pretty incredible. I mean, look at this clear trend breakout. Massive. You tried shorting this, you got run over up until you hit this 596 liquidity. So our members took profits on our June 6 594 calls, SPY calls, and we banked nicely on that specific trade. Those went deep in the money. We are still riding July 3rd 600 calls, full disclosure, but those are already printing for us. So as far as what strike zones and what contracts you're wanting to take, I still think there's more upside in this market, but don't be surprised if we get some sort of a pullback tomorrow or at some point. I think we can have a continuation rally and then another little pullback. But as we progress higher, there will be profit taking in this market. Please give this video a like down below. Comment whether you think there's more upside in this market, what tickers you're bullish on. If there's any requests, put them in the comments. I'll be happily able to look at some of your charts and do some analysis for you. Take care, everybody. We'll see you on the charts tomorrow. Tune into the live stream.